So thank you, first of all, everyone, for being here. It's very special to get to this milestone. A decade is a long time, but it also feels like a blink of an eye. So let me just maybe take you on a time travel journey. 2015, we were just getting started. We just begun our tryst with Achedin. There were probably 350 million people on the internet in India that time. There was maybe 3,000 startups in India. And you could literally count on one hand, the meaningfully sort of listed tech-backed, VC-backed companies in the country. So that was the context in which Nilesh and I decided to try and build a platform for the new economy. Lots has happened in that period. We've gone from a 2 trillion market cap to a 5 trillion market cap. We've gone from IPO being a hope to IPO being a strategy. And we've gone from having almost zero market cap, maybe a few billion, to now almost 200 billion of listed market cap in the VC-backed ecosystem. So I think for us, this has just been an incredible journey, just to be an ecosystem enabler, to be a partner to that, and then to support all the founders in the room, and then also to have the support of all the investors in the room has truly been very, very rewarding for us. I think just when you get to these milestones, you reflect on maybe some of the choices you made and how you got here. And it looks great in hindsight. But, when we began, the idea was, how can more capital really solve problems, right? It wasn't just about one more product. Interestingly, when we started, there was a lot of equity available. The venture capital ecosystem was quite developed. There were banks. But when you talk to a bank about getting a loan for a startup, it was absolutely unheard of. And that was the problem that we saw, that, look, there's these great companies, they're growing nicely, they just don't have access to any kind of debt. And so we said, look, let's build a solution to help these companies access capital that's non-dilutive, that allows them to scale. Founders get to own more of their business. The business is more efficient. And hopefully our investors make a great return along the way. And then with that, we said, look, this has to be more than just a single, sort of transaction. It has to be approached with a relationship mindset. So we went out and started building these relationships ground up with the VC community, with intermediaries, with founders that we've known for some time. And then we backed them again and again and again. And then most importantly, we said we have to do this long term. And hopefully getting to 10 years is a indication of the commitment that we've shown. But unlike capital that flirts with this market and leaves, we said we're here for the long haul, and we're going to make sure we build long-term alignment. And that also led us to doing the hard work, which is trying to get capital from Indian institutions, many of whom had never heard the term venture debt. They heard of venture capital, they heard of debt. But when we walked into, say, Deepak Parekh's office and sat down with him, and he was rolling his eye and saying, look, what are you guys going to do? And finally he said, okay, take our money, but just don't lose too much of it, right? So we began our journey with banks and insurance companies back in 2015, and many of them have stayed with us. And I think maybe the kind of moment of truth was when IFC decided to support us 10 years later. So that's been a big milestone for us from the long-term perspective. Obviously, I think as we've grown, we realized that we really want to be this life cycle partner. And now being a life cycle partner requires you to do hopefully more than one thing. And for many of our companies, we've ended up becoming this solution partner that can provide them some debt. Hopefully, as they scale, we can also provide them some equity financing, and then maybe help them manage their balance sheet and their stock inflows of capital. So, broadly, we're at about 10,000 crores invested now in the Indian startup ecosystem. We think that's a substantial contribution to the ecosystem. We, of course, have been able to work with companies, and, some of our companies, we've done all of these things. Some we've done only a few. But it's been an opportunity to really become a fairly unique offering that has debt, equity, and advisory, as opposed to just a single strategy firm. One way to characterize it is we've seen the evolution, and some of you may recognize these logos, some of you may not, but, from the time we were helping companies that were organizing the agri value chain all the way to now a company like Inframarket doing cement and aggregates and tiles, from Big Basket, which was a challenger at that time, to to a Zepto now that's sort of redefining the notion of commerce. So we've had the opportunity to work with some phenomenal businesses but also seen the arc of the internet and tech in India, from horizontal commerce, vertical commerce, ed tech, agri-tech. So it's just been, incredible just to see how far we've come. But it's also allowed us to, work with companies with a 1 million check to a 20 million check, from growth financing to working capital, and, truly across all stages and sectors, including to a point where now, even as companies are gearing up to go public, we're still able to do something for them. That said, like every journey, we've had our share of shocks. And I think all of the founders and many of the investors here will appreciate that, in this 10-year period, we had at least 4 or 5 significant shocks to the system. Just after Nilesh and I got started, we had demonetization, and it really did mess up a lot of the transaction processing in a lot of our startups. Of course, we had a credit crisis back then. Then, of course, COVID, we all remember staring at those screens, those 20 faces on a Zoom, trying to figure out what is going to happen tomorrow, walking around in masks. It feels almost dystopian and a memory that we can't relate to, but it was just a few years ago where our entire world had turned upside down, especially when you have startups that are going at 100 kilometers an hour, and the next morning their business just stops, right? So I think that brought us all together in a very unique manner, and I think built a level of resilience around a black swan event that we'd never seen before. Of course, there's a massive correction in the tech and, equity financing ecosystem, which we had to navigate. And then most recently, thanks to the regulatory changes that happened in sectors like fintech and tariffs and geopolitics, we're all navigating this on a pretty month-on-month basis, right? But suffice it to say, this has made us stronger. What doesn't kill you makes you stronger. And we feel like we've crossed a lot with this, and hopefully it's given us the capacity to deal with whatever comes next. Of course, the greatest joy is in seeing your portfolio companies get to either the finish line or the starting line, whichever you think about it. In a way, the IPO just begins their next leg of the journey. But we've had the privilege of working with some incredible companies that have already had exits. And part of the conversation tonight will be about founders that have already taken their company public, as well as founders who are likely to take their company public pretty soon. And then we believe that these are the ones that will have exits over the next 12 to 24 months. Of course, this would have not been possible without the support of some very high quality institutional capital and family offices. So, when we began, it was actually a very interesting time. We went out to institutions. We were backed by RBL Bank and the Azim Premji Foundation. I remember Nilesh and I sitting on the lawns of Willingdon Club with Rajiv Ahuja and literally over a Seb Puri in Bombay, agreeing that they would come in as our anchor. And it helped that, they were a challenger bank. They were hungry. They wanted to prove something. And the idea that venture debt would give them a new strategy to engage with the ecosystem was the vision that they had. And of course, Premji Foundation, just being, a foundation that needed cash flows on an ongoing basis. Back then, they'd done very little work in the world of alternatives, to the point where they would sometimes have to sell stock to create cash for their program. So by investing in a income generating strategy, they ended up creating a great cash flow for the foundation and have been with us for the last 10 years. And then, of course, family offices and global institutions, Japanese money, which, as many of you know, takes a very long time to come through. But we've had the support of Japanese investors as well. And then most recently, European fund of funds. And then, of course, firms like IFC will also come on board. So thank you for all the support over these years.